The Australian dollar, once a strong global currency, has faced significant challenges against the US dollar in recent years. But why is the Aussie dollar struggling, and what are the key factors behind this trend? Let's uncover the economic, political, and global influences, along with future predictions and the role of the Reserve Bank of Australia, RBA, and government policies. The Australian dollar, AUD, has traditionally been a commodity-driven currency, heavily influenced by exports of iron ore, coal, and natural gas. However, compared to the US dollar, USD, the AUD has been losing ground. In 2023, the AUD hovered around 64 to 67 cents against the USD, significantly lower than its peak of $1.10 in 2011. So, what's causing the AUD's struggle against the USD? Let's break it down. Australia's economy is heavily reliant on iron ore exports, particularly to China. A drop in demand or prices directly weakens the AUD. Recent slowdowns in China's construction sector have reduced demand for Australian resources. Falling coal and gas prices due to global shifts toward renewable energy also impact the currency. The U.S. Federal Reserve has aggressively raised interest rates to combat inflation, making the USD more attractive to global investors. The RBA, on the other hand, has been more cautious, leading to a widening gap in returns for investors between the two currencies. The AUD is often seen as a risk-on currency, performing well when global markets are optimistic and commodity prices are high. During global uncertainty, such as recessions or geopolitical tensions, investors flock to the USD, a safe haven currency. Australia's inflation rate, while high in 2022 to 2023, has shown signs of moderating. This has led the RBA to pause rate hikes, weakening the AUD further. Rising cost of living pressures and slow wage growth also impact domestic consumption and investor confidence. The Reserve Bank of Australia plays a crucial role in managing the AUD's value. Through monetary policies, the RBA adjusts interest rates, influences inflation, and stabilizes the economy. The RBA has been slower to raise rates compared to the U.S. Federal Reserve, which has widened the interest rate gap. While rare, the RBA can intervene in Forex markets to stabilize the AUD if it drops too low. In a 2023 statement, the RBA highlighted that external factors, like global interest rates and commodity markets, are largely beyond its control. The Australian government also influences the AUD through fiscal policies, trade agreements, and economic diversification efforts. China remains Australia's largest trading partner, accounting for nearly 30% of exports. Any strain in relations significantly affects the AUD. Efforts to reduce dependency on mining by investing in sectors like technology, agriculture, and renewable energy are ongoing but slow. Strengthening trade ties with other countries like India and Japan is part of the long-term strategy to stabilize the AUD. What does the future hold for the Australian dollar? Experts predict the following scenarios based on current trends. If global markets stabilize and China's economy picks up, the AUD could see a rebound, potentially reaching 70 to 75 cents by late 2025. However, if the U.S. maintains higher interest rates or global demand for commodities weakens further, the AUD may remain below 70 cents for the foreseeable future. Australia's focus on renewable energy exports, like green hydrogen, could create new opportunities for the AUD in the long term. According to Bloomberg analysts, the AUD is expected to average 68 cents in 2024, with risk skewed to the downside. A weaker AUD has mixed impacts for Australians. Australians pay more for imported goods like electronics, cars, and fuel. Traveling to the US or other countries becomes more expensive. Australian goods become cheaper for overseas buyers, boosting export industries like agriculture and tourism. The struggle of the Australian dollar against the US dollar is a complex interplay of global and domestic factors. While commodity prices, interest rate policies, and global market sentiment play key roles, the actions of the RBA and the government will shape the AUD's future. The question remains, can Australia navigate these challenges and strengthen its currency in the coming years? What are your thoughts on the AUD's future? Let us know in the comments below.